Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 1st of July. There's the first trading day of the second half of the year, and you've got a real basis of any real direction at the moment. You've seen that Treasury yields have ticked higher, which tends to be coming with a mild risk positive angle. But there again, in the forex space, you've got the yen, which is outperforming, and little real direction elsewhere. So nothing really toing in terms of direction on that. The dollar again sort of seems to be consolidating, sort of fifth day in a row. It's basically gone nowhere now on that dollar index. Although what you do see is oil, which is starting to pick up. It has been consolidating sideways pretty quietly, but it's picked up quite decisively today, around about 2 to 3% higher. And a little bit of upside move on the DAX. But other than that, not a great deal of direction. You could argue silver and gold are still holding on to their breakouts, but yeah, much beyond that, nothing really to go on. What you have seen is some data out today from the from Asian session, the Tankan survey, the survey of Japanese industry, showing that the manufacturing side in Q2 was under pressure. Yeah, it's quite a big decline actually, minus 34. So that's sort of taken a little bit of edge off positivity today. And then sort of into the European session, there's been an upward revision on manufacturing PMI for the Eurozone, still in contraction mode though. UK sort of as is on the 50.1 from the flash reading. So not a huge amount of steer there. In what we are looking out for is the US data, I think, today. The ADP employment number is expected to show a growth of 3 million jobs. Now, that's interesting because obviously we've got payrolls tomorrow, would suggest that, I mean, they're actually in line, those two estimates at the moment, 3 million jobs growth. But ADP, absolutely terrible job of calling payrolls report last month. So yeah, depending on how much weighting you give to that. Now, also we've got the ISM manufacturing PMI 49.5, up from 43.3 last month. Now this is an interesting one because what you've seen recently are all these Fed surveys, these regional Fed surveys coming ahead of expectations and back towards obviously the zero line, which would suggest we're certainly coming close to that 50 line on the manufacturing PMI, up from 43.1. So that's going to be important this afternoon. Now, in terms of my chart of the day, actually also crude oil inventories, sorry, a slight inventory drawdown of around about 1 million barrels this week expected. Right, my chart of the day is dollar Canadian. Now, as I said, the oil price has started to make some upside moves again, and that tends to come with the Canadian dollar strengthening. And what we have seen is this what looks to be this rally towards the top side of the downtrend channel, which is now falling over. That really strong negative candle yesterday, broken uptrend. Also, you've seen the momentum indicators starting to roll over. Those stochastics bear crossing. You've seen pretty much every time a bear cross on stochastics works pretty well as a sell signal in the last 3 months. And as I said, having broken that little mini uptrend, seemingly set up for a third negative candle in a row, it seems to be sort of suggesting that this rally is rolling over and it's starting to sort of generate some downside momentum once more. I think that if the market moves below 34.80, that would obviously be your trigger point for a decisive move to sell. But at the moment, it certainly looks as though it's positioning that way, given the fact that it's rallied to the downtrend and then now started to fall over. Let's have a look on the hourly chart, where you can see that the market is just sort of, as I said, faltered underneath 36.20. Sorry, that's an old level I can get rid of now. And taken on more corrective configuration on hourly momentum indicators, RSI and MACD, all looking more corrective. So it would suggest that little rallies are a chance to sell now. You've got initial resistance 35.85 up to 36.20. Probably a near-term sell zone that now, so it looks like it's setting up for renewed downside. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.